Good afternoon. Welcome to daily currency update from the currency desk. In the morning today, we had a gap up opening for the dollar. That is, rupee posted opening losses. But this was mainly due to the FOMC meet outcome yesterday. The FOMC meet remained largely neutral, suggesting no major changes. At the same time, the key rates were also kept constant. Also, further on, there were talks that Fed would bring in some indication or give some indication of another round of quantitative easing, that is round 3, but there were no indications of the same. Due to this lack of stimulus or lack of policy changes from the Federal Reserve, we had the US dollar gain against all the forex majors, and US dollar index, which shows the value of US dollar against other major foreign currencies, was up about 0.5% to 83.11 levels. In the morning, we had the Asian equity markets, the equity indices also falling, but their fall was largely halted or capped mainly due to the ECB policy expectations. The ECB policy is due today, and in the evening we would witness some change in direction or some movement based on the outcome of the ECB policy. There are huge expectations from the ECB policy, mainly because the last week we had some statements from the ECB head Mario Draghi indicating that they would take in some measures so as to avoid the fall of the European Union as a whole. In the US front, we had the ADP non-farm employment data, which was positive and showed some improvement in the job scenario. So if in the next few months, if we have the job scenario improving, then it could be slightly bullish for the US economy. We had the US ISM manufacturing index, which was slightly lower than expectations. So overall, the US data scenario was largely mixed. So we do not have any major takeaways except for the fact that we are not going to see any easing or monetary stimulus from the Federal Reserve in the near term. So any rally based on such expectations would not sustain. Coming to the UK front, we had the UK PMI data coming out yesterday, and surprisingly, what shocked the market was that the UK PMI data was much below expectations. Due to this low PMI data or negative PMI data, we had a major fall in pound against all the forex majors. Not only dollar but pound had also fallen against the Indian rupee as well. We saw approximately 0.30 or 0.5% depreciation in the pound value against the Indian rupee. On the Japan front, we had a verbal intervention by the Bank of Japan, which stated yesterday that it would take up any measures required to stem the appreciation of the Japanese yen against the forex majors. Bank of Japan is majorly against a yen appreciation because it affects their exports, and as we all know, Japan is mainly a export oriented economy, so any impact on the exports would have an impact on their health of the economy. On the technical basis, we have a bullish trend developing in dollar. One can create a fresh long position at current levels with a stop loss of 55.42, which is the first support level. In Euro INR, we have witnessed some fall today. If the fall is below 68 or say 67.76, there could well be a reversal of trend and we can enter into fresh short positions, which would be below 67.76 levels. In terms of pound, the trend seems bearish. one can hold the short positions right now with a stop loss of 87 in the spot. In terms of yen against the Indian rupee, also there is a bearish trend, so one can enter into short positions at current levels with a and keep a near term target of 70.33 in the spot. Thank you.